If you've been online or watching the news recently, you may have heard all about President Biden's child tax credit payments that many Americans started to receive early last week. There's been a lot of confusion and misinformation about these payments, and I just wanted to take a moment of time to talk through some of the most common questions and myths that we've been receiving about the child tax credit payments. Before we start on that, it's helpful to talk through what a tax credit is. A tax credit is a dollar-for-dollar reduction in the amount of taxes that you owe the IRS. For example, if you owed $1,500 in taxes to the IRS, but were able to claim a $500 tax credit, you would actually only owe $1,000. The child tax credit is meant to help support parents that have children by reducing their overall tax bill. Traditionally, for every child that you had under 16 years old, you could claim a $2,000 tax credit per year. So if you have 2 kids, that would be worth $4,000 in tax credits per year, meaning that your tax bill would be reduced by $4,000. This tax credit is also what we call fully refundable, meaning that if the credit reduces your taxes owed below $0, whatever that amount under $0 would be refunded to you at tax filing. For example, if you owed $2,000 in taxes but received $4,000 worth of tax credits, you would actually get back $2,000 for a refund when you filed your taxes. It's a nice benefit for parents. So what's changing? First, the credit has been increased. For tax year 2021, the credit is now $3,600 per child under 6 years old and up to $3,000 per year per child between the ages of 6 and 17. That means if you had 2 children, a 5-year-old and a 7-year-old, you may be eligible for a total tax credit of up to $6,600 for the year. So who's eligible to receive these tax credits anyway? In most cases, to receive the full tax credit, you would need to earn less than $150,000 per year if you are married filing jointly, or $75,000 a year if you're single. If you make more than those amounts, the credits begin to phase out by $50 per every $1,000 your income exceeds those thresholds. So, to recap, the first major change to these tax credits is that they are increasing. The second major change, which is getting the most attention right now to be honest, is the fact that the IRS is now automatically advancing or prepaying 50% of these payments to you starting this July through the end of the year. This is designed to help families take advantage of the payments throughout the year rather than having to wait until tax filing to receive the benefit. These payments started on July 15th and will continue on the 15th of each month through December of this year. It's important to note that these are an advance on your estimated tax credit. The IRS is using your last tax return to estimate the amount of tax credit that you would most likely receive for 2021. The biggest question that most people are asking now is, should I opt out of these advanced tax credits? And the answer for most people is, it depends. Generally speaking, it may be worth opting out of the advance on these tax credits if, number 1, you expect and rely on a tax refund each year when you file your taxes. Since this is an advance or a prepayment of 50% of your estimated tax credit, if you originally planned on receiving 100% of your credit on your tax return, you could actually receive less money than expected on your refund. You should think about opting out if you tend to owe money each year in taxes to the IRS. If you typically tend to owe money to the IRS during tax time, any credits that you receive in advance on in 2021 will only increase the amount of taxes that you would be paying come tax filing time, because that full credit is no longer being applied when you file your taxes since you already received some of it during the year. Finally, number 3, you should think about opting out of these credits if your income is expected to be higher in 2021 than it was in 2020. Again, eligibility for these credits begin to phase out, meaning the credits will be reduced from the full amount when you make over $75,000 a year if you're single, or $150,000 a year if you are married and file taxes jointly. If you think your income will be higher this year, you may qualify for less child tax credit than the IRS is estimating. If you do receive an advance in excess of what you actually qualify for, you will be required to pay back the excess payments with your 2021 tax filing. So, to recap, for some people, these advance credits will be a benefit throughout the year, providing some additional cash on a month-to-month basis. For other families, especially those who expect and rely on a tax refund every year, those that tend to owe money to the IRS every year, or those that families' income is expected to be higher in 2021 than it was in 2020, it may be worth considering opting out of these advances and waiting until tax filing to see what credits you actually are eligible for. To opt out of the advance payments on the child tax credit, you can go to irs.gov and click on the Manage Payments button in the Advanced Child Tax Credit section. While making the complex simple is certainly not one of the IRS's core values, thankfully it is here at Kennedy Financial Group, where we exist to help our clients live their best financial lives. If you have a question about your specific situation or need a recommendation for a great tax expert, please reach out to us or visit our website at kennedyfg.com.